Hello again, FairBinaryOptions.com here, and we are continuing our project stating the advantages and disadvantages when trading with oscillators, what to look for. And one of the advantage, or the major advantage, is the fact that an oscillator is giving you or is showing you overbought and oversold levels, and one should look for divergences into these overbought and oversold levels, but considering those divergences solely with or based on the oscillator is not on price. If one of the two, oscillator or price, is lying, then the one that is lying or is showing a fake information, then the one that is lying and showing a fake information is nothing or is no one but the oscillator. This is the major advantage that that a trader may have. However, what's the bigger disadvantage? The bigger disadvantage is to use too many oscillators on the same chart, basically looking for confirmation. This is a danger because you will end up waiting for the perfect setup which may not come. So let's go an indicator, let's choose another oscillator. So we have the relative strength index. Let's go with the commodity channel index, for example. And we put the commodity. This is the CCI, or the commodity channel index. If you look at the similarities between the oscillators, well, they are almost the same. But you cannot trade divergences. For example, I don't know, this is a divergence from here to here. Look at price. So price goes and makes a new. This is price makes a high. Price makes a new high, but the RSI is not making a new high. On the other hand, the CCI is doing exactly like the RSI is showing a move to the upside and then a move that is not making a new high. So this is a confirmation being given by the same in the same divergence manner by just a different oscillator. If you go and take another one, I don't know, let's go and take indicators, let's take oscillator, let's take the marker, and we put it on the screen. Well, look at the market. We have a high in our euro US dollar here that we said that made a high in here. Then market makes a higher high, but they are not being confirmed by the oscillator. None of the oscillator. This is the RSI. This is the commodity channel index. This is the demarker. So basically what I'm trying to say here is that you can put each and every oscillator you want on the screen. In the end, they are going to show you exactly the same thing. Overbought and oversold levels, or divergence that can be spotted only with one oscillator. My recommendation is to use the RSI as it is the most reliable one. It is not painting, and it's pretty much similar with the marker. If you go and take then any other oscillator that you may find here on the insert and the indicators under the oscillator tab, you will find out that they are exactly the same, and it doesn't make any sense to put them on the screen with the danger of looking at too many different things, losing the focus on the actual price, and you are putting yourself in the danger of missing an important information on the actual price. Because keep in mind that all of these oscillators are showing values based on the previous 14 candles. The way to use it, if you want to find a confirmation based on a different time frame or based on more candles, is to use different settings for each and every oscillator. For example, use the RSI 14, use the CCI 7, and use the marker 28. In this case, you will have an idea on the medium to longer term when it comes to divergences, or when it comes to overbought and oversold territory, and you can trade with the one that is traveling the fast, or with the oscillator that takes into account the smaller period of time or the smaller number of candles than the other ones. Thank you for being here, and this was dedicated to oscillators. Bye bye.